There are business leaders that are making so much more than profit in their enterprises. They're elevating their businesses, teams, and themselves to add more value. And so can you. Welcome to the Chris Cooper Business Elevation Show with host Chris Cooper. If you were looking for ways to elevate success while contributing to a better world, you'll want to listen in for the next hour. Now here's your host, Chris Cooper.
Hi, this is Chris Cooper, and a huge welcome to the Business Elevation Show on Voice America. Wonderful to be back with you for another week with another great guest, with Daniel Wood today. We're going to talk about raising capital and calculating risk today. And before we do that, I'd like to say it's a big thank you to my guest last week, Dr. Draven James. For those people who've listened to the interview and come back to me on it this week, people absolutely loved. I got a note saying, what a wonderful, amazing woman. Dr. Draven James was brought up, found herself homeless as a child. Her father died at a young age in Chicago. And she said to me, I put it this way, I spent a lot of time walking before I went to school. And today she's a kind of an ambassador for everyday peace. She's written a great book. She's a film actress. One of her sort of most famous parts being a part in the HBO series The Wire. She's also still has a full-time job, which is incredible, running the pharmacies for 3 hospitals with a team of 40 at the moment, which I thought was quite incredible. One of the things Dr. Draven James said last week was that, as she said, restless minds need a place to stay and to settle. And I thought that was really insightful. And what I hope today, you might be feeling anxious perhaps with regards to your personal situation, wherever you are around the world. But what I hope that this show does, I hope it gives you hope. I hope it gives you inspiration, and it gives you a place to come with your restless mind where you can kind of settle, you can listen, you can learn, you can take some key nuggets and ideas from our guests to help you to elevate your thinking and elevate your circumstances in the world and your business. My work is about helping leaders to elevate their performance, to build engaged teams and engaged organizations. And that gives me enormous fulfillment and passion. And I strongly believe today that if you're a leader out there, what you have to do is you have to elevate your thinking. Not so much utilize your intelligence, but also utilize your wisdom to ensure that what you do is you take your business towards a future which is actually contributing to a better world, and which is what we need right now. So on to today's show, and we're going to talk today about raising capital and calculating risk. And I don't know if this is something you've thought about or something that you do, raising money for your business ventures, but I certainly wanted to explore this today. And I've got an amazing guest, and I'm pleased to call him a friend too, Daniel Wood. His name is Daniel Wood, but he is from Sweden, and he will be talking to us today from Sweden. It sounds a very English name. And there are 25 ways to raise capital, according to Daniel, for your business projects or your financial investments. So today we're going to talk about what they are, when it's sensible to borrow funds, and hopefully that will help you through the maze, which is raising capital, and also give you some thoughts to think about actually, should you be doing this? Should you be drawing it from your own pocket, or borrowing it on your credit cards or mortgage or whatever? Because today, if you can grow your business, you can ultimately make a bigger contribution in the world, and your reach can be bigger. Now, Daniel Wood started out as a property investor, investing from his home country in Sweden. And for some reason, he invests in the UK. We'll find out about that. And this came with multiple challenges and setbacks. But over time, himself and his wife, Gisela, were able to build a property portfolio that allowed them to leave their jobs. They've gone on to found the Swedish Wealth Institute and Momentum Property Education, where they support investors and entrepreneurs, and they introduce them to top experts in the industry. They've got their own podcast, Momentum Investing. They've had some cool guests. And what What they've also done is they've raised over £20 million for property investments. They've helped facilitate property deals on 3 continents. So let's find out today about raising funds, about managing risk, and I'm sure we're going to get some tremendous advice today. So a huge welcome to Daniel Wood.
Thank you so much. So honored to be back again.
Yeah, it's I think it was a couple of years, wasn't it, since you introduced, well, it was a bit different, wasn't it? You introduced the Swedish rally princess, I seem to remember.
Yeah. I actually went back and looked. So it was in August 2018.
Yeah.
It was because we were doing our annual Empowered Women event. I say annual. We haven't been able to do one this year for obvious reasons, sadly. But Annie was one of our keynote speakers. She's just an amazing woman. And we were lucky enough to be able to be on your show together. Yeah,
it was. I remember it was great fun and a very inspiring lady. I think it's amazing, isn't it? The opportunities that are available to people. It doesn't matter what gender you are, and she really, was beating the males big time with some of her rally ventures, wasn't she?
Oh yeah, she's still doing it.
So what have you been up to then since August 2018?
Well, the world has changed since then. So it's been a real exciting journey. I mean, back then we were, as you mentioned, property investors, and we'd started the Swedish Wealth Institute really because the reason why we'd become property investors and been able to leave our jobs was because of the amazing people we'd been working with. We worked with people like Kim Kiyosaki, Success Resources, and through them, Tony Robbins. It's just like amazing, amazing people. And we wanted to share that. And that's what started the Swedish Wealth Institute, bringing these speakers to Sweden. And so I never did any teaching myself. It was just that role of facilitator. But we've kind of grown since then a little bit. We've started, as you mentioned, we started Momentum Property Education now, which is the first time I'm teaching actually personally. And it's came out of the fact that our journey has been a little unique. We live in Sweden. I'm born, raised, I've grown up here. My dad's from the US, so I don't actually have any connection to the UK prior, but we decided to start investing in the UK. And that came with, let's just say, a certain set of challenges and investing from afar like that. But after facing a lot of different challenges, a lot of setbacks, we were able to figure it out. So a lot of people started coming to us and basically saying, hey, we'd love to learn from you. We'd like you to help me. Could you please help me do what you did? And initially, I actually said no, because we started our investment journey to be able to get out of a job and get out of working. But when people come to you and ask, it's hard to say no when someone comes and asks for help. So finally, we said yes. Obviously, we'll help out. We'll do what we can. And it was just very, very fun. We really, really enjoyed it. And people started having good results. And it led to us starting Momentum Property Education. So in 2019, I was speaking all over Europe, about 6 days a week on different stages, different countries, different cities, teaching property education, which was really, really fun.
And you moved home as well. Weren't you living in Stockholm when I first met you, and somewhere? Then you moved to Ireland, didn't you?
Well, so yeah, we live on an island now. So yeah, what happened was when COVID hit, we obviously couldn't do our live events anymore. So instead of me being out traveling, 6 days a week, all of a sudden we shifted to doing things online. We've put together a great online community. We have a Facebook group called International Property Investors, where we have now well over 1,000 investors that are every day communicating, discussing deals, bouncing ideas, learning. And we've just gotten much closer to our audience. But we realized we don't actually have to go around and travel anymore. I do it all in front of a computer. So we didn't actually have to live in Stockholm. And for the last 17 years or so, every summer we've come to this island outside of Sweden. It's the largest island in Sweden called Gotland. And so we decided to move. It was an opportunity. So I think that's really one of the things we've seen from this whole change of circumstances. There are also a lot of opportunities. The shift to online has been really, really tough, but it's also provided us the opportunity to spend more time at home, to be able to actually provide a better service to our clients, because there's just so much more value you can give on an online course, and the cost is obviously a lot lower to deliver than what you can do at an event. So it's all in all, it's been really, really cool.
Excellent. Excellent. Sounds fantastic. I'm still intrigued as to why invest in the United Kingdom? Why not invest in Sweden?
Well, as an investor, I can be very, very analytical. So I kind of try to put my emotions aside and be a little cold when it comes to investing. And what happened was we read the book. That's what started us out, a book called Rich Dad, Poor Dad, which I know is the starting point for a lot of entrepreneurs. It really inspired me to get started on my investment journey. And they talked about property. So when we were going to start investing in property, we did feel we just didn't have enough knowledge. So we found a company that taught property investing. We went to a couple of their courses, and they showed us just mathematically and based on regulations and just the overall market that in Europe, the UK was the best market to invest in. I've later confirmed that now that I actually have some more experience myself. But they convinced us that it was the right market to go into. And we basically said, if that's the best, that's where we're going. And we started investing.
And here you are. So you've got a presence on my island as well as your own island.
Well, the Vikings came to the UK a lot back in the day, so we're just reviving that old tradition.
Yeah, sounds like it. So you've also got your own podcast, Momentum Investing. I know you've interviewed some really cool people too on your show, and I just wondered any insights from that which you think will help people get through this current situation.
Well, I mean, the top person I've ever interviewed on the show, it's this guy called Chris Cooper. We had a great show when you were on. I really appreciated that. So, for anyone listening, Chris was amazing. But no, that episode was really cool. And I took away a lot from that and from other interviews, like with Kim Kiyosaki, Jordan Harbinger, and others we've interviewed. I think I really want to point actually to some of the things you said in your episode were really the importance of communication. Because I think one of the things that has happened now is, we in some cases we've had breakdowns of communication. Obviously, we can't meet each other the same way. A lot of companies are now working remotely from home, and keeping that company culture, keeping the focus, keeping that energy can be really, really hard. So I've used a lot of things from that episode to make sure to re-engage my team, make sure to keep them on track, to keep that focus, and also the same with our clients, to use that communication. So that's been really, really big for me. We've also learned a lot about networking, which I've seen. We were speaking about one of your former guests who's also been on our podcast, Judy Robinette, who's just shown me how amazing it can be as an entrepreneur to work on introducing people to each other. And that's just opened a lot of different doors for me, meeting her and seeing how she opens doors and kind of trying to emulate that and do introductions. It really makes a big difference.
Yeah, she's on the show again next year. I think of the date. I think sometime in the end of February. I think we've got Judy again. She's been on the show twice before. She's on the 26th of February, and she's fantastic. And I just I wanted to introduce her to you because she does have this way of finding out what's important to people and then making those connections. And it's taken her all over the world, hasn't it? To the White House, Buckingham Palace, palaces in Serbia. She's got amazing client list, and it really demonstrates, doesn't it, the power of networking and giving, really.
Yeah, because that's what's impressed me about it too, is she doesn't do it as a lot of people would teach, is to get in, be the middleman kind of role. No. And try to make that introduction. She really does it out of I'm going to give you so much, I'm going to overwhelm you in value that you then almost feel obligated to give her value back. Yes. And it works so well. I mean, you can't help but love her for it. And at the same time, I'm now doing introductions for her to all these amazing people that I know. And so her network just grew by another circle. And she does this obviously with, dozens of people a week. So I can imagine how her circles are growing all over the world.
Yeah. So you're giving today, you're sharing with us about raising capital and calculating risk. So tell us a little about your experience of it and how you personally calculate risk. We've got 3 minutes before commercial break.
All right, so I'll try to be a little concise here for once. So the way I see, when you're looking at raising capital, you have to look at the risk. There are two types of risk. So one part is your financial risk, and one part is your reputational risk. So when you're raising capital, there are so many different ways to structure the deal. You can always borrow money at an interest. You can borrow money and go in as a guarantor. You can get money where you're putting a financial risk in play, right? And then there are other ways to structure it, for example, through equity, raising by selling off equity or convertible loans, where you don't actually take a financial risk. You're basically getting this money and you're giving away a cut of the future profits. But by doing that, if things go poorly, yes, you don't owe money, but your reputation will obviously take a hit. So whenever you're raising money, you have to look at how confident am I in this project? And obviously, I've raised a lot of money for property deals, but I've also done it for some of our companies. We've raised finance in different ways as well. And when looking at that, you have to answer the question, how confident am I in this project? Will we be able to deliver? And if you are, you then have to look at what is the potential upside, what is the potential, what is the best case, what's the worst case, and what's the most likely scenario. And then what's exciting to me, for me, raising finance is really, it's basically a puzzle. Because you have all these different tools. We've identified 25 ways to raise finance. And then you have your deals on the other side. And it's really like putting down a puzzle. You say, all right, I got this source of capital right now. So you might have, for example, one thing we've done lately is raise money through crowdfunding. And we can talk more about that, exactly what it is. But essentially, I can borrow money at an 8% interest, and I have to pay it back within 18 months. So if I'm going to borrow money short term like that at a pretty high interest rate, I need to find a deal that will fit. And so I put that together, and then if I can find that fit, then I do that deal. If I don't find that fit, I'll have to walk away. Does that make sense?
It does make sense. Yeah. So actually, you're basically securing the finance first, are you? And then identifying the deal.
Well, it kind of goes both ways. So, you'll get a deal on the table where you can do the same thing there, where you say, okay, I have this deal, this type of money would fit. So, for example, if I was buying a fully refurbed block of flats in central Manchester, for example, well, I know I'm not going to be making a lot of cash flow from this property, meaning I might not want to borrow money on a high interest loan. I might be looking for an equity partner, someone to buy into this company with me, and then we'll run it together. They might do the money. I might be the operator, or my team will be the operator. And so there I can then go the other way, and then I can go out and see, all right, what kind of available sources of joint venture finance are out there?
I see. We're going to get a commercial break now. After the break, we'll talk more about this, and we'll start to look at some of these different areas that you might want to consider, the pros and cons. And of course, also, thinking through whether you'd rather put yourself at risk in terms of your home or cash advances and things like that. We're back again with you in just a couple of minutes.
When it comes to business, you'll find the experts here. Voice America Business Network.
Would you like to work personally with the host of this show to help realize your potential? Chris Cooper supports business leaders and high potential individuals to achieve greater success in their businesses and careers. Support includes the opportunity to join a high return group mentoring and mastermind program called the Achiever Program. One-to-one mentoring and coaching, facilitated leader development workshops and speeches. Email info@bemoreachievemore.com to arrange a free, no-obligation consultation to see how Chris and his team can help you.
We hear it and read about it every day in the news.
America is heading over a fiscal cliff. Home prices are still receding and unemployment growing.
How can you preserve and increase your wealth in this kind of economy? Tune in to Turning Hard Times into Good Times with host Jay Taylor. Jay will explain the decline of our monetary system and the economy, and will give you winning investment ideas and the tools to protect and increase your wealth. Turning Hard Times into Good Times with Jay Taylor can be heard Tuesdays at 3 p.m. Eastern Time, 12 noon Pacific Time on the Voice America Business Channel.
If you hear a dog dog barking, or an angel singing, then you know that you are listening to Waking Up in America. Heard every Wednesday at 3 Pacific Time, Valerie Kirkard and all of her friends will bring you powerful and humorous discussions that raise thoughts and give you insight on how to live your life to its fullest potential. Adventure is always a must on Waking Up in America with Valerie Kirkard every Wednesday at 3 Pacific.
When it comes to business, you'll find the experts here. Voice America Business Network.
You are tuned into the Business Elevation Show with your host, Chris Cooper. If you have a question or comment about our show, please direct your emails to chris@chriscooper.co.uk. That's chris@chriscooper.co.uk. Now back to Chris Cooper.
Hi, this is Chris Cooper, and welcome back to the Business Elevation Show. And I'm talking about raising capital and calculating risk with my great Swedish friend, Daniel Wood. So, Daniel, let's talk a bit more about the 25 different ways, just to give people a bit more of a sense about some of those different components, and then we'll focus in on a few of them that are probably particularly relevant.
Yeah, absolutely. I mean, this is one of the things I love speaking about. This is what I go thinking about all day is how do we find sources of capital? How do we fit that together with potential deals and potential projects? So far, we've identified 25 different sources, which is a lot. And that's where it gets fun, because you can keep going to these sources and compare them to the deals you have and do that mix and match. So when you have the right deal, when you have a deal, you can say, all right, this is the type of funds that I'm looking for, and vice versa. If you have someone come to you and say, I want to invest, this is the terms, you can then go out and find a deal that fits, and hopefully it comes together and you have a successful project done, so to speak.
I just want to, just kind of interested there's probably quite a lot of people listening to this who've maybe got quite small businesses. Some people will maybe be, one-man bands, and they're thinking, should I, if I raised some money, I could maybe, significantly improve my website, or I could, improve the way that we communicate out with customers, or whatever. And they're probably thinking, actually, I don't want to necessarily put myself at any kind of risk. What's your view on that? What do you, when you're thinking through risk, you're a lot of time you're buying property, but do you think it's important as a key requisite of being a business person, an entrepreneur, to be able to identify some ways to grow your business and be prepared to take that risk and borrow money to do it?
Absolutely. I think it can be very valuable. But there are really three kind of structures, I would say, you could use when you're raising company finance, so when you're raising money to your business. And so all these 25 kind of fall into one of these three. So either you can borrow money at an interest rate, which means you don't give up any control, you don't give up anything of your business, but you have to pay this interest and you'll have to pay back the loan. So that's one way of going at it. The other way is to sell off some of your equity, so sell off shares or create new shares to raise additional finance. And what that does is obviously that money becomes, for the company, that becomes free money, right? Because you don't have to pay it back, you don't pay interest, but you as the owner have given away some of your ownership, meaning some of your control and some of your future upside. The third way is to put in your own money. And, that would be, as you mentioned, maybe borrow money from your home, or if you have savings, and put that in. And so there's always a kind of, with any of these, there's always a certain amount of fear. Like, what happens if the business doesn't go well, right?
Yes.
Then, if you've borrowed money at an interest, the question is, have you signed any kind of personal guarantee for it? If not, well, really, the only thing you'll lose is your reputation, which in itself is obviously valuable. So that's something you need to be careful with. But you can't lose anything financially if you can kind of walk away. And it's the same thing with the equity setup is, again, you risk your reputation, but you're not risking yourself financially. And then it's the third where you put in your own money, which means you're not risking your reputation, but you're risking your money.
Yes.
So those are your kind of setups you can use. Now, there's always a time and place for external finance. So for us, I can take an example actually, where we are considering a finance raise in one of our companies right now. Regular company now, not property company. Property company, we're always raising finance, but in one of our, so to speak, regular companies, we're looking at possibly raising finance. And we're looking at it as we might raise a decent amount of money and we'll be selling off about 5% of the company in that case. Now, we've set a valuation of the company as to what we think it's going to be worth, now and kind of taken some of the next year's growth potential as a basis for it. But we also know that we are right on the cusp of some massive growth in this business. And over the next few years, we could truly grow this business by a lot, meaning that 5%, if the investor is lucky and if we're lucky, that might turn into an average 30% return per year for the investor.
Yes.
So if you compare that to borrowing money at 6%, that does sound like a very expensive source of capital, right?
Mm.
The thing is, though, it comes with very little risk for us because as a business, we're not having to pay interest. We're not having to, we don't have to pay back that money. We get that money into the business. We can pump it into the growth. And then whatever money we make off of using that, we can continue to push into the growth. So we're in a position in that company where the infrastructure is in place. And now we just need to push marketing dollars out there. And when you're there, it can become frustrating. You put money out, you wait for the sales process to go through, you get some money in, you then throw that back out into the pond, and you have this spin where hopefully if you spend $100, you make, $150, $200 back. And as long as you have that, you can consistently grow. But the question is, how quickly can you turn that around, right? If it takes 6 months from that you spent your 100 till you get your 150 back, well, that's how long time it takes before you can spend that 150. So that's a frustration, one of those things that can slow growth, which is why we're looking at pulling in some money to push and get that wheel spinning quicker earlier.
Is there a risk, though, with that second option when you're maybe selling some equity, that what you start to have is 5% might be different, but there's a risk you start to have a party that has a close interest in what you're doing and tries to start to maybe dictate how you behave?
Yeah, that's one of the reasons why we've chosen to take a reasonably small amount of money, allowing us to give up a pretty small share of ownership. So we would be using, and this is where we kind of get into the 25 sources of capital. There are different types of people, companies, and institutions that would look at doing what would be classified as a venture capital investment. And so if you're going to move in on the institutional or the larger investment companies, they're not going to give you they're not going to do a $50,000 investment or $100,000 or $200,000. They might be looking at, hundreds of thousands or even more in their investment rounds, which means that will force you to give up a larger percentage of your company. And in the future, or even right away, that can start leading to you losing control. And that's definitely a risk and something you have to do. And really, that goes back to the episode we did on the Momentum Investing podcast together. It really comes down to sitting down and, as you shared, talking about the values, getting clear on the goals, and making sure that both parties are aligned so that they're not coming in looking to take the company in a different direction than you are.
Yeah, and it is such an important point. I've experienced this myself in joint ventures with partners when we put some money in together, and seen joint ventures go awry, particularly when the money's got big and suddenly there's gaps in values or perception. I've suddenly been, you start with good friends for a start often, but then when it gets a bit more complex and there's a bit more value involved, that friendship can be strained, can't it?
Oh, seriously, yeah. A lot of our students go out and they want to raise finance because a lot of our students obviously start with some money, but also a lot of them don't. and they're going to get into property investing, which is a very cash intensive type of investment. And a lot of them want to go down the joint venture route. And so we actually added the interview that you and I did as a part of the education to make sure that people go through that process of make sure that your values align. You had some great exercises for that. And then, make sure that you are clear on the goals and that you ongoing then do this work. So you don't just say, look, we had a meeting once agreeing on what we wanted 5 years ago. These obviously things change. The money changes, the situation changes, the personal situations change. You have to ongoing do this work to make sure you're aligned and aiming for the right and the same target.
Yeah, and I think if it is a sort of joint venture and you're going in this together, putting your money in it together, you've got to make sure that each of you have got the kind of right flow. You and I do a lot of work with a system called Talent Dynamics, don't we, to help people understand how they fit in with each other. Because often what you can do is you meet someone and you really like them and you think, these people are great, but you really like them because they're just like you.
Yeah, exactly.
So you often don't need to.
We use Talent Dynamics a lot, and it's exactly that way. You want to work with people, like emotionally, you want to work with people like you, but that might not help. We had a great interview with a man called Szymon Rudish on the Momentum Investing show, and he talked about joint ventures and how important it is that when you're doing a joint venture, you shouldn't look to get 1 + 1 becomes 2, right? You want to look for partnerships where 1 + 1 can become 3 or even more, where you're bringing different skill sets to the table, where you're bringing different types of contacts and people and business, which can allow your company to grow much bigger than you guys could do separately.
Yeah. You got that's it's very true. So take care in that area to make sure that you really do your due diligence with people before you enter into relationships that might be painful further down the line. So we've got these 25 sources of capital, and what are the key ones then that are particularly relevant for people?
Well, so if you break them down into these 3 different parts, I can share a couple for each type of finance. So if you look at loan for interest, just so you're borrowing money, that could be from an angel investor, like a business angel could lend you money at an interest rate. It could be a crowdfunding platform like I'm using right now on the property side, where we're borrowing money at 8% interest. It could be a company loan. Your company, if you have a bank account with a bank, you could borrow money directly from the bank. So that would be just 3 classic ways of borrowing money in the company at an interest rate. Then you could do, in the kind of the equity side of it, you could do a joint venture partnership, as you mentioned, where you bring in a partner. It could be a 50-50 partnership, or it could be a silent partner, or it could be a minority owner like we're looking for. We're looking for a joint venture partner, basically a business angel, to come in and take a 5% stake of the company. You could also do an equity raise, where if your company, for example, has 1,000 shares, you could create another 500 shares and sell them to potential investors, which can have, depending on where you are in the world and what structure and where your company is, the investors can get pretty serious tax breaks for investing into a small company that's doing an equity raise. So that's 2 ways of doing that. And then on your own personal money, you could have your own capital. You could take you could take out a personal mortgage on your house or as an individual and put into the business.
Excellent. So let's have a look at kind of loans for interest and company loans. And you also mentioned in there, you put in that sort of pot crowdfunding.
Yeah.
So where do you go to gain sensible interest rates? So you're not, you've talked about that. You've got one at 8%.
Yeah.
Which is still I'd say that's kind of, was that sort of medium? Would you say in terms of?
Yeah, I think that is it's pretty reasonable. I mean, obviously, we're using it for property, meaning it is pretty expensive for property because it's such a stable asset. But in a company sense, 8% is, in many countries, obviously, it depends on where in the world you are. In some countries, 8% is incredible. In others, it's horribly overpriced. But a lot of company loans, what we see in countries like Sweden, The UK, Germany it's usually about 6 to 10%.
Yep.
So 8% is right down the middle there.
Yep. And so in this particular instance with your crowdfunding, you set that interest rate, did you, to make it attractive for people to want to invest?
Yeah, so it was essentially a dialogue with the platform. They charge a 2.5% success fee, as they call it, basically a setup fee. So they charge that from the loan. So if I borrow £100,000, they'll take 2,500 off the top and pay out 97,500. And then I'm paying interest, obviously, on the entire 100,000. So that's a little hidden extra cost there. But they were completely open. We had this conversation. I sat down, like, what are the terms? What are all the costs? And then when we got to the kind of crowdfund play part of it, like, what do we need to offer in order to get it through? Because that's one of the things, too, is you don't want to put a project, do all the work, spend the setup costs, the marketing costs, and everything else to get the loan out and maybe record video and all the work that comes into being approved. And then the loan doesn't fill because your offer was too low. So I sat down and kind of said, well, what does it need to be? And obviously the crowdfund platform is always looking for as high a number as possible. But I went to the platform, I saw what the other loans were at. We had a conversation and we kind of landed on that 8% being not lowest on the platform, but the kind of lower half. So I knew they fill these type of projects. And we could kind of prove by the fact that we're doing a stable project and that we have a good history. And I mean, it was a platform were the ones who reached out to us, not us to the platform. So our reputation kind of allowed us to pull down the interest as well.
And is there any risk on the 8% or to people?
Well, so for me, there is no risk. For the investors, the way it's secured against the property. So there's very little risk in that case for the investor. And that's something you can do as a company is if, for example, if your company owns a property, you can raise money using that property as a security, which allows obviously the lender, that reduces their risk greatly, which means that they'll be able to lower the interest rate or give you more money based on what you're looking for.
Yeah. Well, I've just realised the time. We're heading into commercial break again at the moment. In a minute, and we'll chat a bit more about loan for interest, company loan, and I'd also like to chat. We talked a bit about JV already, about personal, about when should you put your house on the line.
Yeah, absolutely. Let's get into it.
We're back, everybody, in just a couple of minutes.
From the boardroom to you, Voice America Business Network.
Would you like to work personally with the host of this show to help realize your potential? Chris Cooper supports business leaders and high potential individuals to achieve greater success in their businesses and careers. Support includes the opportunity to join a high return group mentoring and mastermind program called the Achiever Program. One-to-one mentoring and coaching, facilitated leader development workshops and speeches. Email info@bemoreachievemore.com to arrange a free, no obligation consultation to see how Chris and his team can help you.
Have you become a member yet? Sign up now to become a member of Voice America. It's always free and easy. Plus, you get to take advantage of some great member benefits. Get unlimited access to millions of hours of on-demand content across all of our channels. Keep track of your favorite episodes, shows, and hosts in your own customizable library. Find out what shows you might be interested in based on your favorites. Plus, you get insider access with our newsletter. Membership gives you more. Sign up at voiceamerica.com and click register at the top right.
From the boardroom to you, Voice America Business Network.
You are tuned into the Business Elevation Show with your host, Chris Cooper. If you have a question or comment about our show, please direct your emails to chris@chriscooper.co.uk. That's chris@chriscooper.co.uk. Now back to Chris Cooper.
Hi, I'm with Daniel Wood. We're talking about raising capital and risk. And before the break, we talked about crowdfunding. And just quickly to finish on that, any platforms you'd recommend people look at, Daniel, when it comes to crowdfunding?
Well, it's so different. It depends on what industry you are in, really, and where in the world. So I think the best thing you can do is really either go to a local community, if you have a business community, and talk to them, or even go out on like Facebook and find Facebook groups, because at this point there are literally hundreds of them spread all over the world. We use a few different ones for the property side, and so there are a lot of different ones you can go to.
And the whole thing, it's kind of requires a bit of learning, doesn't it, to use that? There's all sorts of methodologies and things that you can offer to people through crowdfunding in
exactly.
return.
Well, once you get in touch with the crowdfund platform, they're obviously very helpful. I mean, they want you to do and they want you to succeed, because that's when they get paid. Yeah. So you can usually lean on them a lot. And if you talk to 2 or 3, that becomes a pretty good, essentially, crowdfunding mentorship right there.
And loans for interest, or getting loans into your company. Obviously, you utilize crowdfunding. Was that because 8% is more achievable through crowdfunding than going to a bank? Well,
one thing there was essentially they came to me and said, look, we want to fund your property deals. And I'm not one to say no to money. So they basically wanted to fund almost 100% of the property deals. So the interest rate wasn't really the calling card. I mean, obviously it's more expensive than I would pay with a regular bank. The difference was the fact that they were offering to lend a lot more than a bank would, which allows us to do more deals quickly. And because of the deals, so that's what then took me to go, okay, so I obviously want this money because I can almost get free properties. Yeah, in terms of my own money, free properties. So now I just have to find the right type of properties that fit with this type of finance.
Yeah, I see. So yeah, in the UK, we have something called bounce back loans, which came out post-COVID to help limited companies through. I guess that's if people are sitting with money, which at a very low interest rate, I think was for us, it was 0% in the first year and 2.5% in subsequent years. That's a pretty good source of finance, pretty healthy rates, isn't it?
Oh yeah, absolutely. I mean, that was so generous by the government. A lot of countries didn't have that. Sweden, for example, didn't offer that. So I think that was a very, very generous setup that if you did take advantage of it and you could use it, that really puts you, that's really a very cheap source of finance. I know a lot of people did abuse it, which is obviously wrong, but overall, I think it was great that was offered. And I think it saved a lot of companies from the whole results of the crisis, so to speak.
Yeah. And then equity joint venture, we talked a little bit about that. What about angel investors who maybe not coming
in many cases, I think it's always a question of, when do you want to bring on equity capital and when do you want to borrow money at an interest or use your own capital? I mean, those three kind of spin around each other. Because the problem is if you sell basically you're selling equity. So if you're selling equity very early on, again, that's very safe money for you as a business owner and for the business. But at the same time, the value of your company is so small that you're selling your stake very cheaply, which means if you then grow into an apple, you'll see how valuable the shares you gave away were. Whilst in that case, it can be, what a lot of entrepreneurs try to do is they'll put as much of their own money in early as possible. And that's where you have to make that kind of weighing. Should I put so much that I'm burning my ships behind me? Or do I just put, all the savings I have and, if it doesn't work, I can go back to a job worse for wear, but not destroyed. So I think that's up to the personal kind of risk taker. But I think that's a good first step because it allows you to grow your business, increase the value of the company. And then for phase 2, when you start looking at the next round of finance, you could either go to a bank or you go to an equity investor. And I think the equity investor can give you more than money. If you're talking to the right equity investor, they can either open doors, they can open partnerships, they can also open doors for other finance. So one of my friends in south of Sweden, what he's doing is he's actually putting together an investor network that are going to pool funds together. And then as a group, they're going to invest in startup companies. And so a part of their offer will be, for example, they'll give a company, say, £100,000 as an equity investment, but then they'll request a seat on the board of directors And using that seat, they'll then go and find kind of the primary finance type. So they'll go to the banks and the larger banks and say, look, you know us, we are experienced business people. We believe in this company. We now want you to lend, £500,000 to this company at a low interest rate. And so that's a value they're bringing. So their investment isn't just worth the 100,000, it's worth 100,000 plus very low interest 500,000, for example.
I see. And that's, I see. So I can understand that, but they're going to have some sort of interest in your business, aren't they?
So they'll take a bigger stake than they would for just 100,000. And that's where you, as a business owner, if you could get that type of, so to speak, cheap finance without the equity investor, then that's often a better choice to borrow some money cheaply, get the money in. As long as you see that your cash flow holds and you'll be able to service the interest and be able to pay the loans, then that can often be a better choice early on while you grow your company. And that's as it grows, that will then allow you to instead bring in, when you then do an equity round, you can do like we do and only sell 5% and still get a decent amount of money into the business, or sell a larger percent and get a lot of money into the business.
And if you feel uncomfortable doing this yourself, are there other people you can go to who would handle this on your behalf?
Yeah, that's one of the most exciting parts. In our property education, we work so much on this. We go through the 25 sources. We make a plan for how to raise finance. And a lot of people get excited and, they go out and they have huge success in raising finance. And then there are a lot of people who just completely get kind of locked. They're not the type to network. They're not the type with a lot of contacts. They aren't confident in their ability to sell. And what's exciting is the more I've dug into this, the bigger that industry seems to be. There's a huge industry they're a type of broker. So they broker deals between people with money and between people who need money. And so if you get in touch with people like that, and they're all over LinkedIn, the important thing is to do your due diligence and make sure they're actually a legitimate business and not a scam artist there taking advantage of you. But if you find the legitimate business, they can go to bat for you, kind of like I mentioned with that equity partner, but they would take a commission instead of equity.
Yeah. Yes, which could providing they're operating in your interest and not their own, trying to maximize their commission, could ultimately potentially save you money.
Yeah, exactly. I mean, essentially, you're outsourcing the task. So if it's not your skill set, it's one of the things as entrepreneurs we're always looking at is what can I do that no one else in the business can do? And then make sure I can do that as much as possible to maximize the profit of the business. And if one of the things you see that you're just not good at, you don't enjoy, you don't want to do is raise finance, well, bring in someone else to do it for you.
Yeah. And you've got this, the Swedish Wealth Institute, and obviously your property company. And you've worked with Tony Robbins' organization as well. How do you have any thoughts on helping people who maybe came from an environment where borrowing money was maybe frowned upon, and have got to go through that little mindset to enable them to comfortably borrow money? I remember my mother when I got an overdraft, and I remember my mum in tears because I got this overdraft at the end of my college days, saying you're the first person in my family I know who's been in debt since outside of a mortgage. She was quite disgusted and ashamed at the time. And that sometimes sits deep-rooted with some people, doesn't it? And can stop them from borrowing money and investing.
Absolutely. I mean, I'm from Sweden. It is everyone's like your mother here.
She's great, my mum, but she taught a cautious approach.
Yeah, no, absolutely. And that's what I learned growing up. I mean, I had the similar situation with my mom, actually, when I started investing in property. She was crying. My dad left the room. So they did not believe in the dream. They later came to, so that was nice. But that fear is very, very common. And that's a part of the way we kind of go about it. So, I got to know Tony Robbins' organization because we're partners to Success Resources who work very closely with them. So we work through that partnership. But for me, I worked a lot on, it's about changing perceptions among people, because when you're just starting out, everyone tries to stereotype everyone, right? We want to know, Chris is an entrepreneur. That's Chris. All right, good. So if I have entrepreneurial questions, I come to you. Daniel's a property investor. So if I have property investing questions, I go to Daniel. But then there might be Steve, who might be he might be a stay-at-home dad. So Steve, I come to if I have questions about my kids. Or Laura is a solicitor. So I go to her about, questions about law. And if Laura now wants to become a property investor, or Steve wants to become an entrepreneur, people, that doesn't jive with the stereotype they've been placed into, so to speak.
Yes.
Which means before Laura can ask for an investor, or before Steve can, pitch his products, they have to change the perception of people around them. They have to make people see them as an investor that knows what they're doing, as an entrepreneur who's running a serious business. And that is a bit of an art form. You can use, there are so many tools now, you can communicate through social media, you can just network, you can literally just tell people. And what happens is often they'll react negatively, like, your mother did there with your loan, or my parents did about me becoming a property investor. But over time, their kind of stereotypical view of you starts to change. And over time, you become a new stereotype. Now Steve's an entrepreneur and Laura is a property investor, which means now people start coming to them with those questions. So now Laura will get people reach out to her with questions about property investing, which obviously makes it a lot easier to then say, hey, you know what, you've been asking me questions for the past 6 months. Would you just want to be a part of one of my projects? You can come on as an investor.
Excellent. So just in a minute, because I've only got a couple of minutes, I'll need to wrap up. And who would join the Swedish Wealth Institute or Momentum Property Education? What's your ideal client? Are they international? Are they based in Europe? Tell us.
Yeah, we actually have clients all over Europe, South America, Asia, and Africa. So we are covering a lot of the world. We don't have a lot of people in the United States. We do have some, though. So we're kind of spreading our tentacles all over the world. But really, Momentum Property Education's focus is really to help people learn how to invest in property. So we have a free introductory course that gives kind of the basics of property investing, and that works anywhere in the world. Because a property is a property wherever you are, right? It is kind of the same. So that you can go to just www.momentumgift.com, and it's a free course, teaches the 3 simple steps to property investing. Our then goal is really to help you build a portfolio, and that can be through investing in the UK like we do, which is where we have most of our education. The ideal kind of client is usually someone that's, a little older, maybe at least, kind of gotten out of school, a grown-up, if that makes sense. So most of our clients are in their 40s and 50s, looking at building a pot for their retirement.
Excellent. So we have 30 seconds left.
Yeah, so that's momentumgift.com is for the property people. For the entrepreneurs, Swedish Wealth Institute, we do mainly live events, and it's in the Nordics. So anyone in Sweden, you can go to swedishwealthinstitute.se and you'll find us there. You'll see what events are coming up. We have some exciting things that are coming. We've just translated Cash Flow 101 to Swedish, which is super exciting.
Excellent. Hey, it's been brilliant talking to you. Do you have a quick final message for us before we...
I just appreciate being here. Thank you everyone who took the time to listen. And really, when it comes to raising finance, just make sure you think about it. You have these 3 different overall methods: your own money, lend money, and equity money. And just make sure that you're thinking it through. Why do I want this money? What am I going to use it for? What am I offering? And what will be the value that they get? And then take that risk equation in. How much do I believe in this, and what type of risk do I want to take?
Fantastic. Absolutely brilliant talking to you again, Daniel. Find out more, swedishwealthinstitute.se and momentumpropertyeducation.com. And on next week's show, we've got Dr. Ginny Whitelaw. Dr. Ginny Whitelaw used to manage the space station, believe it or not. She's a Zen leadership expert, a martial arts expert as well. And she's doing amazing work around the globe around helping people to kind of step up. She's written some amazing books. The latest one is about science behind how we kind of resonate and kind of our energy is passed on to others to create communities, etc. It's going to be fascinating next week. So do join us with Dr. Ginny Whitelaw. And a huge thank you to Daniel. And any questions, comments, come back to me at chris@chriscooper.co.uk. Always love to hear from you and receive your feedback. Have a great week.
We thank you for listening to the Chris Cooper Business Elevation Show. Please join your host, Chris Cooper, again next Friday at 8 a.m. US Pacific Time on the Voice America Business Channel. Be more. Achieve more.